Hello and welcome to the Biz News Briefing. In our top stories tonight, we're going to be looking at a new boon for South Africa. The EU has finally woken up to the trade war that's going on between China and the US, and it's put South Africa on top of its list to put together some critical minerals. We have them, they want them. And then we're going to be talking about the world's most valuable company, a company that's worth 12 times the South African GDP. They brought their results out last night, and there was a lot to like about it that has helped markets around the world to move a little stronger. But first, before we go there, the news of the day here in South Africa, kicking off with Investec. And Investec's financial results were released. That's for the 6 months to the end of September. It's a tale of two geographies. And it again gives you an indication of how South Africa is actually competing very well in terms of businesses against other parts of the world. Investec is almost half of their business now in the UK and the other half here in South Africa. The CEO, Fani Titi, is based in Sandton, and there's anybody who drives past the Investec head office there will know that there's quite a presence of the international private bank in that area and indeed in the country. But what you might not have known at first glance is that Investec reports in pounds, and that's because it is listed in both London and in Johannesburg. And the adjusted operating profits, this is for the 6 months to the end of September, were slightly higher in South Africa in pound terms, 238 million pounds against the UK's 230 million pounds. But where South Africa really outperforms is on return on equity. In other words, the money that was put into the South African operation is giving Investec shareholders a return of 18.5%, whereas in the UK, it's only 13.6%. As far as volumes are concerned, though, the UK is winning that game. It now holds the lion's share of the loan book, more loans in the UK than in South Africa, 17.5 billion pounds against 16.3 billion pounds here at home. Moving on to our second story in the headlines today, and you'll find more of this on Biz News. The JSE has tired of the attacks on it by a company that's listed on the stock market called Mantengu. It's taking Mantengu to court for an urgent interdict to stop it from passing what it believes to be fake information. Mantengu has been running a media campaign. Indeed, they sent us information earlier this week that we published on Biz News, and that was based on the belief that it had emails that were written by two directors of the JSE, which were pretty incriminating. One of them from Zahara Bassa, and the other from the former CEO of Sanlam, Ian Kirk. Kirk is a non-executive director. Zahara works inside the JSE. The JSE says they're fake emails. They were never written by these people. And so what is contained in them is absolute rubbish. Well, we will find out more tomorrow after the courts have sat and had a look at it. But at the moment, it's very difficult to see how Mantengu is going to be able to prove its case when the information that the JSE has given us, including from the person to whom the email was sent, allegedly it was his address, and he says, no, it's not my address either. A fellow called Pesh, who writes under the name of the finance ghost in South Africa. No relation to Sean Pesh, who is well known as the founder of Ranmore. Our third story in the headlines today comes out of the lockup press conference at the MTBPS last Wednesday, when I asked the DG of Finance, Director General of the Treasury, whether they could release the names of the municipalities who have, first of all, applied for debt relief from Eskom and those who've been granted. Now, the bad news here is that there were 71 municipalities that applied. They had to reach or meet certain criteria. Only 24 of them did. So it's a failure rate of 70%. And amongst the 24 that did, there's some surprising names. The Free State and Mpumalanga saw almost total collapse, excepting for the Mangaung Metro and Mbombela, Bloemfontein and Nelspruit. And in the Western Cape, they had a 100% clean record. So the 4 municipalities from the Western Cape which applied for debt relief, all 4 of them were granted because they met the criteria of Treasury. I'd suggest go and have a look at that list. It's on biznews.com. And if you happen to live in one of those towns where your municipality is not meeting the criteria to get that debt relieved, and you're talking billions of rands here, then I would be asking some very serious questions. Well, on to our big story, one of the 2 that we're focusing on tonight, and this is the European Union's creation this week of a strategic minerals operation. According to the FT, our partners in London, the first port of call of the EU bureaucrats was sunny South Africa. I asked our mining guru, Peter Major, why this would be so.
For anybody that wants to acquire minerals, your first tick should be South Africa. And then we always tell people we're non-aligned. And we should be using that to our advantage, not negatively. Yeah, we should be non-aligned. We should be able to deal with anybody, any of the 210 countries on the planet, as long as they tick our conditions, our terms and conditions. So, yeah, it's a very logical, well-based decision. Start talking with us first.
But what is this critical minerals entity that the European Union is putting together, and why?
So I saw some of those European comments. They said America's out there grabbing minerals right under our noses. Well, yeah, because it's a war. So Trump says, I don't want to be dependent on anybody. I want to have enough minerals and metals that we can sustain our economy, no problem. So Europe better get a move on. And it's harder united 28, 29 countries than it is America.
Okay, but why now? Why at this moment?
That's the match that lit the fuse, was the trade war that the United States has ignited with China and China retaliating, limiting rare earths. And as Europe said, we're collateral damage. We didn't have anything to do with Mr. Trump fighting with China, but now China limits rare earths, and gee, our auto manufacturers and our other critical users of that mineral, we can't get it. So yeah, we're being beaten up just as bad as the United States, and we had nothing to do with this.
Okay, so the Chinese are now saying we will not provide to the rest of the world or those that we don't like. And the Americans have already made a plan. Donald Trump's at it. And the European Union has belatedly woken up and said, whoa, hang on, if China's not going to be providing these minerals, we better make a plan for ourselves. And hence the toenadering or reaching out to South Africa.
Yeah, look, I'm imagining if I was in Europe and I was helping run this show, I would be doubling my efforts to negotiate with China and say, please don't include us in your sanctions of America. You know, so you always have a diplomatic front, even in war, right? You still have your diplomats negotiating, but well, your generals are busy fighting and your economy's busy making plans.
Good news for the country if we play our cards right. That full interview is on biznews.com/briefing. On to Nvidia, which is the most valuable company in the world. It was founded in 1993 by 2 guys from Sun Microsystems and a Kentucky-raised Taiwanese guy called Jensen Huang. Jensen is now probably the most recognizable man in tech, even more so than the Bill Gateses and the Mark Zuckerbergs. And the reason for that is the incredible achievements that Nvidia has made over the past few years. The share price there has gone from 22 cents, or the equivalent of 22 cents when it was listed in January 1999, to $186 today. That's a compounded annual growth rate over that period, 26.8 years, of 28.6%. Nice symmetry to those numbers, aren't there? The company is worth 12 times, get this, 12 times South Africa's annual GDP, having risen by another 5% last night when they more than met the investment world's expectations, already high expectations, for the financial results. We pick up here with Jensen, who spoke with our partners at Bloomberg.
Business is very, very strong, but we've planned our supply chain incredibly well. We have the largest supply chain in the world. Our partners, TSMC, our memory partners, SK Hynix, Micron, Samsung, are doing a fantastic job supporting us. And all of our systems partners, Foxconn and Quanta and Wistron, our packaging partners, everybody's doing a fantastic job supporting us. And we've done a good job planning for a very, very strong year. And we've done a good job planning for Vera Rubin. So sales are off the charts. Nvidia GPUs in the cloud is sold out, but we've got a bunch of Blackwells to sell.
Blackwell is the latest chip, but they've got another trick coming just around the corner.
The silicon for Vera Rubin, 7 different chips are back in our labs. And the bring up is happening across engineering teams. Probably a couple of 20,000 people are working on bringing up Vera Rubin, from silicon to systems to software to algorithms. People are working around the clock, and this bring up is going beautifully. We're on track to deliver Vera Rubin about Q3 timeframe of next year, continuing our once a year cycle. Vera Rubin is already assured a huge success. Everybody's incredibly excited about it. Can't wait to show everybody.
What a story. And again, those numbers that came out were just spectacular. 60% growth year on year. That's what you call exponentiality in action. And the only problem with that is that investors have pushed the share price of Nvidia into the stratosphere. And it did have a little bit of a pullback recently, although after last night's results, up another 5%. Well, that's been your briefing for tonight. We'll be back again on Monday. Until then, cheerio.